Good morning and welcome to the Morning Outlook. I'm James Preston reporting live from 𝐊𝐶𝐞 TV's Sydney studios. In this show we take a look at the global market performance overnight and the top news of the day to see how the market might unfold. Let's start with the news that are making headlines which have the potential to affect the market. Beijing has responded to Australia's new alliance with the US and the UK, under which Canberra will acquire nuclear submarine technology as an extremely irresponsible threat to regional stability. Chinese Foreign Ministry spokesman Zhao Lijian told a regular press briefing on Thursday that the agreement seriously undermines regional peace and stability and intensifies the arms race. Those comments, however, come with the backdrop of aggressive expansion from China in the Pacific. This includes having held assault drills near Taiwan a month ago, as well as reports of increased submarine activity in the Pacific since the beginning of 2021. In making the historic announcement yesterday, the Western allies did not mention China when unveiling the new submarine deal on Wednesday in US time, but their intent was clear, with each referring to regional security concerns. And in a similar vein, US Secretary of State Antony Blinken has raised concerns about China's use of economic coercion against Australia. Mr. Blinken spoke in Washington at a joint news conference with Australia's Defence Minister Peter Dutton and also the Foreign Minister Marise Payne a day after the US and Britain said they would provide Australia with the technology and capability to deploy nuclear-powered submarines. Australia and the US have also reached new force posture agreements that will see greater air cooperation through rotational deployments of all types of US military aircraft into Australia, and in an arrangement that Mr. Blinken referred to as an unshakable alliance. Let's now take a look at the market performance over the past 24 hours. While the Aussie market faded from this yesterday morning's high, the ASX 200 still finished firmer for the third time this week. The ASX 200 rose by 43 points or 0.58% to 7,460.2. This was more than enough to recoup Wednesday's 0.27% decline and reduces the losses recorded since the start of this month to just 1%. Keep in mind, though, that most of September's losses can be blamed on last Thursday's outsized slump, which was the worst day in 6.5 months for the local market. The ASX 200 also rose by 1.9% in August and is up by 13% year to date. While almost all sectors rose yesterday, energy stocks stood out thanks to a 3.1% lift in the oil price. The US Energy Information Administration, the statistics agency of the US Department of Energy, reported that oil inventories fell to the lowest levels in 2 years. Australian pharmaceutical industry stood out on Thursday with a 16.1% lift in its share price after receiving a sweetened takeover offer from Wesfarmers. Wesfarmers' $1.55 per share cash offer was an improvement on the $1.38 offer made on the 12th of July 2021. API shares have surged by 30% in the past 2 months. Wesfarmers said that we see opportunities to invest to strengthen the competitive position of API and its community pharmacy partners by expanding ranges, improving supply chain capabilities, and enhancing the online experience for customers. Meanwhile, Domain Trading, with the ticker of DHG, has agreed to acquire Insight Data Solutions. Its technology focuses on real estate valuation for governments, corporates and consumers. Also, Telstra, traded as TLS, held its annual Investor Day with shareholders yesterday, saying it's confident of maintaining its dividend and $500 million in further cost reductions. Yesterday, the closely watched and tough to forecast August labour market report was also released. Employment fell by 146,300 in August, due mainly to New South Wales lockdowns, and employment in the state fell by 173,000 in the last month. Employment in Victoria actually rose, though, by 29,100. However, next month's release is likely to highlight the impact of its lockdown. Both full-time and part-time jobs declined, while the unemployment rate improved slightly from 4.5%, and this was mainly due to a sharp drop in the participation rate. Many out of work in August were not actively looking for work, which of course means they were not counted as unemployed in these statistics. The number of hours worked can be an effective gauge of the labour market, with a significant 3.7% drop from July and a 6.5% slump in New South Wales. 7.8 billion shares were traded yesterday, worth a well above average of 11.6 billion Aussie dollars. This was partly due to the monthly expiry of derivatives, which often results in a spike in volumes. It's time now for a very short break, but stay tuned for more news you need before the market opens. Hi there, James Preston for 𝐊𝐿𝐴 TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. 𝐊𝐴N's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on the Tech Beat, exclusive to 𝐊𝐴N TV. Hello there, great to have your company. I'm James Preston and welcome back to the Morning Outlook, a show that gives you all the knowledge you'll need before the market opens. Now, if you're just joining us, we've touched on the top stories with the potential to affect markets, including China's stern response to the new Australian, US and UK submarine agreement. And we've also taken an extensive look at the Aussie share market. Let's now turn our attention overseas. In US economic data, initial jobless claims rose by 20,000 to 332,000 last week. Retail sales lifted by 0.7% in August, while business inventories rose by 0.5% in July. The Philadelphia Fed Manufacturing Index lifted from 19.4 to 30.7 in September. European share markets climbed on Thursday, with the Pan-European Stoxx 600 index up by 0.4%, bouncing off a 6-week closing low hit in the previous session. Travel and leisure stocks lifted 3.4% after discount airliner Ryanair, who is up by 7.9%, raised its long-term traffic forecast. The German DAX and the UK FTSE indexes both rose by 0.2%. In London trade, shares in Rio Tinto shed 4% and shares in BHP lost 3.4%. US share markets were mixed on Thursday ahead of Friday's expiration of options and futures, a quarterly event that usually brings increased trading volumes and volatility. In a choppy trading session, miners Freeport-McMoran and Newmont were the biggest laggards on the S&P 500 index. Shares of online marketplace Etsy and luxury accessories company Tapestry got a boost from the unexpected lift in US retail sales in August. Amazon shares also lifted by 0.4%. And the Dow Jones index fell by 63 points, or 0.2%. The S&P 500 index lost 7 points, or 0.2%, but the Nasdaq index added 20 points, or 0.1%. US Treasury yields rose on Thursday after a surprisingly strong reading in US retail sales lifted some concerns about growth in the world's largest economy. US 10-year yields rose by 3 points to near 1.34%, and US 2-year yields lifted by 1 point to near 0.22%. Major currencies were weaker against the US dollar in European and US trade. The euro fell from highs near US $1.1805 to lows near US $1.17.49, which was also near a US 1.1765 cents at the US close. The Aussie dollar eased from highs near 73.23 cents to lows near US 72.74 cents and was also near US 72.95 cents during the US close. And the Japanese yen fell from 109.22 yen per US dollar to 109.82 and was near 109.7 at the US close. Global oil prices were little changed on Thursday as investors weighed the expiration of crude options as well as the impact of mixed US economic data. And the threat to US Gulf crude production from Hurricane Nicholas also receded. The Brent crude price rose by 21 US cents or 0.3% to trade $75 and 67 cents a barrel, whilst the US NYMEX crude price settled unchanged at $72 and 61 cents a barrel. Base metal prices were mostly lower on Thursday. Nickel fell by 3.1% as concerns mount over demand from China's property sector amid a debt crisis at one of the country's top developers, namely Evergrande. Copper lost 2.7%, with zinc up by 0.3%. The gold futures prices fell by $38.10 an ounce, or 2.1%, to $1,756.70 an ounce. Spot gold was trading near US $1,753 an ounce at the US close. Iron ore shed $6.90 a tonne, or 6.1%, to trade at $106.50 a tonne, its longest run of losses in more than 3 years. Namely, this is due to declining Chinese steel production. And looking ahead for today, in Australia, quarterly tourism labour statistics are released, while in the US, consumer sentiment data is also scheduled for release. Well, that's all for our morning outlook report here on 𝐊𝐶𝐞 TV. Have a great day trading and stay tuned for more market updates and economic news live throughout the day. This is James Preston signing off for now.